This is Mike Reed with cEntellect, and welcome to this week's natural gas highlights. I remain bullish for the 17th consecutive week. My model forecast is November contracts going to close between 285 and 289 per million BTU. My fundamental view is it could be higher than that. We could easily clear $3 as high as 325. I remain bullish really on 6 fundamental factors that I'd like to walk you through. The first is our trailing 4-week average storage injection year on year. We're only up 6 BCF a week. We actually need to be up 58 BCF a week in order to fill storage by the end of October. At this rate, the end of season is going to come in around 3,300 BCF compared to a full level of 3,800 BCF. We're going to have a 500 BCF deficit. That's not going to be an issue if we have a warm winter. It is going to be an issue if we have a normal or a cold winter. So 2 out of 3 weather scenarios for this winter, we're going to be in trouble from a price spike perspective. Second reason is demand is actually up 63 BCF a week year on year last week, but supply is only up 61. We actually last week had a 2 BCF a week shortfall, even with the robustness of the associated natural gas lifting production 61 BCF per week year on year. My point here is yes, supply is up, but I think the market's underestimating the robustness of demand also being up. On the demand side, we see September through November weather outlook still well above normal for the lower 48. The fourth reason is power generation last week was up 13% year on year. Gas generation for power was up 20% and coal was up 5%. And so the power sector is one of the big robust demand drivers for natural gas. The fifth is the industrial sector. So this is actually up for the 14th consecutive week, up about 5.3% year on year. Huge robustness in the industrial complexes pulling natural gas. And the sixth reason is yes, associated natural gas is up, but if you look at natural gas only directed wells or rigs, that count is down for the 13th consecutive week. It's actually down 7% year on year. If you look at how well this bullish view has been over the past 17 weeks, cumulatively we're actually down 1.3% after peaking at 8% and 6% respectively. I'm going to hold on to the bullish view. In closing, if you look at the October contract compared to the November contract, October is only trading in back of November about 1.6 cents per million. That spread is the lowest in 28 years. The normal spread should be about 6.4%. So you take this collapse of the contango between October and November and you pair it with we're having recently high open interest levels, and what it tells us together is we're going to expect a big move in gas. Now we don't know if that big move is up or down, but expect a big view. My view is it will be up. For this and much more information, including the bearish side of natural gas, please visit us at cEntellect.com.